Good morning. You're watching a remote broadcast of Business World Live. I'm Jes Delos Santos. It's 10:34 a.m. this Monday in Manila. We are over an hour into the first trading day of the week. Let's go straight to our top story first. Another day, another bleak forecast for the Philippine economy. This time, it's Moody's investors seeing a deeper contraction for the local GDP this year. Moody's expects the economy to shrink by as much as 4.5% for 2020 before rebounding to 6.5% in 2021. Its new projection for the year is worse than its initial forecast of negative 2% that it gave back in May. Fitch Ratings earlier said it sees the economy to shrink by 4% this year, while S&P Rating gave a projection of negative 3%. Meanwhile, the government expects GDP to contract by up to 3.4%. Moody says the lower forecast reflects a view of a less robust recovery over the second half than previously expected, in part reflecting how the ongoing rate of infections have precluded a more decisive move away from the various stages of community quarantine. The country has logged 44,254 COVID-19 cases as of July 5, when it announced the highest single-day tally so far of over 2,400 infections. Moody said greater progress on lowering infection rates, both in the Philippines and abroad, may be the most important factor shaping the strength of recovery. It also said that a better handling of the pandemic will do good for OFWs. Meanwhile, inflation may have slightly accelerated in June on the back of rising oil and rice prices. That's according to analysts. A Business World poll of 16 economists yielded a median estimate of 2.2%. This is a bit faster than 2.1% back in May. The Philippine Statistics Authority will report the June data on Tuesday. That's tomorrow, July 7th. Now, ahead of that economic data, let's now see how markets are performing at the start of the trading week. And things I can tell you as early as now aren't looking that good. We are snapping those gains that we did see last week. You have the index now declining by as much as 1% here, down to 6,308.32. Again, like we did mention earlier, that snaps 5 days of rally that we did see last week here. That's after you have the country, again, like what we did mention earlier, the Philippines did report cases of over 2,400 of COVID infections, at least on a Sunday. We did see the index declining by as much as 1.1% earlier in the day. You have the likes of SM Prime, JG Summit, and even Ayala Land posting the biggest drags here, at least for the day. Just to give you an idea here, last week, we saw the index on Friday inching higher by 0.1% on a weekly basis, even rising by as much as 3%, to see it climbing at the end of the week to 6,372. But so far, we have lost some of those gains. We are down to 6,310. Those increases were bolstered by positive economic figures. You have the likes of better manufacturing data in the Philippines and non-farm payroll in the U.S. as well. And AAA Southeast Equities Chris Mang is keeping his hopes up this week, even seeing the local bourse test its next resistance level at 6,600. And according to him, should local shares break that resistance level, that may in fact signal an even stronger performance in the weeks that will follow. On the flip side, however, you have clear LVR of plus stocks expecting the local shares to move sideways. Investors are still, of course, trying to balance economic recovery with the continuous spike in cases. But she caveats that by saying that optimism this week is higher, given strong offshore data. Add to that hopes of economic recovery as lockdowns are eased and more businesses reopen with more transportation modes available, especially in the metro. Alluding to the fact as well that you have NEDA Acting Secretary Carl Kendrick Chua saying he is expecting gradual recovery of the economy to start this month in July. But for now, all eyes will be on the June inflation data set for release Tuesday. According to LVR, they're still expecting it to be in the benign territory, but it could actually also lift sentiment as this may strengthen purchasing power and in turn might boost consumer stocks as well as the overall economy. Now from there, let's have a quick check of how our specific stocks are performing. Let's have a quick look at our leaders and laggards for the day here. like what they did mention, of course, earlier, local shares here not faring so well, a number of them declining big time. You have the likes of First Gen now edging lower by over 5%. Bloomberry also, as you can see here, is inching lower at 3.6%. Some of our lenders also in the negative territory, the likes of BPI and Security Bank on the other side of the spectrum. Just a limited number of stocks here starting the day in the green. DMCI is up by 1% here. Alliance Global is also in the green by 0.3%. But we have to keep an eye on banks here. As you see, the central bank is now setting guidelines for digital banks that primarily including them in the list of classification of lenders. Now, the new licensing regime is part of the 3-year digital payment transformation roadmap of the BSP, with hopes of 50% retail payments going digital by 2023. The hope as well is to regulate the sector to ensure digital governance mechanisms. Taking a look at the requirements here set by the BSP, digital banks will only be allowed a physical office at least for addressing customer concerns. At the same time, for basic digital banks, minimum capital is going to be at 400 million pesos. They will be allowed to service retail customers and MSMEs. Now, on the other hand, you also have more advanced digital banks here with a minimum capital requirement of 900 million pesos. At the same time, they will be allowed, apart from the services allowed for basic digital banks, they will also be allowed to grant loans and credit cards and other services approved by the central banks. At the same time, foreigners and non-bank corporations can own up to 40% of digital banks. At the same time, qualified foreign banks can own up to 100%. Now, also, banks incorporated in the Philippines have 2 years to meet minimum capital requirements. Now, we did take a look at some lenders earlier, a number of them already in the red. And as you can see in this chart right here, in fact, you only have one stock here, one lender that's in the green, that is Union Bank. They are up 0.4%. But everybody else, the likes of Security Bank, PNB, and even our big lenders here, BDO, BPI, and Metro Bank, already starting the day in the red, with Metro Bank, in fact, also down by as much as 1.8%. Earlier, I did manage to see BDO starting the day in the green. But of course, as you can see here, they are now in the red. One major development here for BDO, they have raised 36 billion pesos from their latest bond offering that is over 7 times subscribed against the 5 billion peso program. The lender is continually seeking to diversify its funding sources and support lending activities. That band offering has a tenor of 1.75 years with a coupon rate of 3.125% per annum. Interest payment will be made quarterly. Last January, BDO did manage to raise 40.1 billion pesos in bonds. Last Friday, the stock was down by as much as 0.6%. They are continuing those losses today. They are down close to 1%. Now, moving on from lenders to more exciting news here, a possible new entrant into the local bourse, that is Converge ICT. Brokers are expecting a high demand for Converge's 35.92 billion peso IPO. That's for 1.5 billion shares at a price cap of 24 pesos a piece. Offering is set on October 13, listing to be on the 26th of October. And should this push through, this is going to be our second IPO after Merimart did go public just a few months ago. And Japit Tanko of First Stocks is saying, Converge being considered as an essential business due to its telco nature. He's saying that they are poised to benefit from the hastened global shift to digital economy. At the same time, given the firm's strong performance and the opportunities that lie ahead as they tap other regions, according to Tanchanko, we may see a favorable response from the market with respect to its offering. Now, Chris Mangan of AAA Southeast Equities is saying, despite not having voice or mobile services, he's saying that Converge is going to benefit given the online shift in education and office work. At the same time, the company raising an enormous amount amid focus on a single sector. But he notes as well that there is tremendous growth in fixed line internet, and it has a potential to expand its client base. So far, just to give you an idea, Converge has grown 20% or 60,000 new subscribers in June alone, putting their total to 750,000 residential subscribers. According to Tanchanko, there's still room in the Visayas and Mindanao, and the proceed from the share sale could actually go to that expansion. Now, let's have a quick check of our other telcos here, the two major players here. I'm talking about Globe and PLDT. As you can see, PLDT here now, at least at the start of the day, proving to be flat here at 1,290. Likewise, you can pretty much say the same here. Muted trading here for Globe. They are still at 2,110 apiece. Now, a bit of reminder here for publicly listed firms. The SEC is asking companies to give it a notice should they be unable to file their quarterly or annual reports. This after the June 30 deadline already lapsed, as non-filing of the SEC Form 17L within the prescribed period will warrant consequences. Now, here are other stories we're watching this morning. LGUs will no longer receive additional funding to boost their war chest against the COVID-19 pandemic. A budget official said LGUs used only 5.5 billion pesos of the 37 billion peso funding allocated under the Bayanihan grant program. That amounts to a usage rate of less than 15%. The Bayanihan program is a one-time grant to LGUs to support their coronavirus containment efforts. But several officials, like Bataan 2nd District Representative Jose Enrique Garcia, earlier raised concerns that the funds were difficult to utilize because of the limited spending areas eligible under the program. LGUs were mostly able to use the fund for food assistance and medical supplies. Also, the independent electricity market operator of the Philippines hopes to launch the upgraded design of the WESM and the new spot trading floor in Mindanao by December. The operator is still conducting activities to gauge both system and participants' readiness for the new market management system. The IEMOP is still also completing various regulatory approvals. The upgrade system will introduce a 5-minute market trading interval, which is seen to make the market efficient and more attractive for investors in the long run. The operator, along with the Philippine Electricity Market Corporation, is targeting December 26 for the launch of the new system. Senators will legislate bad loan transfers to asset companies in a separate bill and not as an amendment to the Bayanihan 2 bill. Senate Finance Committee Chairman Sonny Angara said among the amendments proposed by the Executive Department is the measure that will unburden the banking system of bad loans. Lawmakers want to remove or ease rules on bad loans or non-performing assets. This is to incentivize banks to provide debt relief to businesses in financial distress. This legislation is expected to support overall economic recovery by supporting the resilience of the banking system after the COVID-19 lockdowns. As the health crisis drags on, e-commerce continues to boom, even amid restrictions already being eased in certain parts of the country. To talk about how they're positioned for further growth, we have with us on the show Ray Alimurung, CEO of Lazada. Good morning, Sir Ray. Great to have you here with us on the show.
Good morning, Jess. Thank you for having me in your program.
All right, sir. First things first, how has Lazada been faring amid the lockdown since March? How much has the e-commerce market grown for Lazada?
So, Jess, I mean, obviously, people were locked down early March, you know? So, even as the restrictions have eased, there's still a lot of people that are still working from home and continuing to stay home after work. So, obviously, we've seen an increased adoption with e-commerce. What we're seeing in Lazada is at least 2x growth in volume from February, which is the pre-COVID period, as well as on the seller side, the sellers that are onboarding. We're seeing 3 times more sellers and brands onboarding on the platform every day versus February. Yeah, and the types of products that we're seeing that are growing very well, obviously, are essential goods, you know, like groceries, household and cleaning supplies. But surprisingly, well, we're also seeing a surge in products that have to do with staying at home and working at home. So, for example, things like office supplies, office chairs, and very interestingly, laptops. An industry, a category that had been struggling, has suddenly seen a surge. Laptops.
Okay, that's very interesting to note. Like what you did mention, two times at least in the volume. All we're talking about, I'm assuming, is it sellers or consumers?
So that's in the consumer side. On the seller side, I mean, obviously it affects the sellers as well. But in sellers, what we're seeing is a surge in the onboarding of sellers, three times daily versus pre-COVID.
Did you also see a pickup in the amount of time that shoppers spend on the platform?
Yes, we're also seeing that, but that's also the increase in time that we're seeing in the platform is also highly related to a lot of the digital initiatives that we have rolled out since we have been noticing that. So, for example, we have ramped up our Laz Live, which is our live stream program, as well as our games. And if you watch these videos or play these games, there's a chance to get rewards, which you can exchange these for seller or platform vouchers. So we these measures that encourage customers to stay online more are also related to also in response to the increase in time that we saw. So it's kind of a virtuous cycle that's happening.
And these increases that you saw, at least since the start of the pandemic, is this still centered in Luzon, particularly in the metro, or is this already a nationwide growth here that we're seeing?
So definitely we're seeing the growth nationwide. It is more concentrated, obviously, in Luzon and Metro Manila, but that has to do largely with the development of the logistics network, which is a lot more advanced in Metro Manila and Luzon. But definitely we're seeing the surge across nationwide, definitely.
But how do you expect to sustain these increases that you've seen in the past weeks here? Especially now you have lockdowns already being eased in some parts of the country and more businesses coming back to play, including the opening of traditional stores.
Yes, so for the increases, I mean, as you know, the platform is pretty scalable. We're using a lot of the best-in-class technology from our parent company, Alibaba, where, in China, China has about 100 million orders a day. So definitely we have a platform that can scale. But probably where your question is going has to do with the logistics, how it responds to this network. And we have been ramping up our logistics capabilities. We work with a range of third-party logistics providers. So we are definitely ramping this up to meet the increasing demand.
But at the same time, more to the point, really, you have traditional businesses already coming back into play here. You have stores in malls already opening. Do you somehow expect that to lead to a decline in activity on your platform?
So definitely, as the offline options increase or start to open up, definitely you'll see customers starting to patronize these establishments. However, what we've seen is that customers have discovered a lot more different type of empowerment in purchasing online. We offer a much wider range of products, a different type of convenience. Even as the restrictions lock down, we see that people are not necessarily comfortable spending a lot of time outdoors. So definitely, there may be a bit of a decline, but it will not definitely go back to pre-COVID levels. I think customers and sellers have seen the opportunities presented by e-commerce and online.
So how then do you plan to sustain that growth trajectory, even should lockdowns, especially in Metro Manila, be lifted?
So our focus just does not change. Now we continue to ensure that we empower our customers and our partners, meaning the sellers and brands. We continue to do this. Today we will continue to onboard sellers and brands that have been signing up. We continue to add new users by offering these additional new brands. No, so we don't see that activity slowing down. So even as restrictions lock down, we expect all of these brands and sellers will come on board. I think what we're seeing is that because of this life-changing crisis or event, every business, every an entrepreneur out there, we feel has to start evaluating what their digital strategy is. This is a transition that they all need to make. Even if they continue to sell offline, they will definitely need to come up with a digital strategy, and Lazada is here to help them do that transition.
Now, one other development here when it comes to online platforms, you have now tax officials hoping, at least eyeing to be more stringent when it comes to their tax policies for online players. In fact, they are hoping to net more revenues from online players, even singling out the big players here like Lazada and Netflix. So how's this going to affect Lazada?
Well, so just let me start by saying, that Lazada has always been consistent in complying with the government's rules and regulations, particularly in regarding tax. We remit taxes on all our fees, which could be on all our fees to sellers. And likewise, our sellers contractually agree to fully comply with local laws and regulations. However, regarding some of the later developments you've mentioned, now we will continue to monitor the situation as it is still a developing matter.
Mhm. But is this also something that's being experienced at least in other units of Lazada in Southeast Asia?
So every country has its own different context and challenges. So definitely, you're seeing a lot of these activities, these issues also being discussed in the other countries, and likewise, like I mentioned, notwithstanding the current regulations that are in development, the whole industry is really still new, and so government regulators will continue to develop a stance, regulations, policies that cater to the development of this industry.
Now, should this push through, how is Lazada going to support their sellers?
So again, no, I prefer not to comment exactly on what will push through, as the whole matter is still developing. However, I think what's important to note when you talk about supporting sellers is that during this particular crisis, Lazada has been we've gone tremendously out of our way in terms of seller support. For example, we launched a bounce back together stimulus package of about 100 billion pesos to support our either existing sellers or to help in onboard new sellers.
Mhm. And at the same time, courier services have been in the news as of late here with certain developments here. How is Lazada ensuring responsible handling of packages, especially with your partner courier services?
Yes, so we work closely with several courier companies now, and I'm aware of the video that you're talking about, and I want to categorically state that that was not a Lazada operation. That is something that we would not tolerate within Lazada. And if anything such was brought to our attention, we would definitely investigate it immediately and put a stop to it. We have a very strong control of our end-to-end logistics experience, including all the policies and guidelines that are favoring the customer and seller experience.
And at the same time, safety of your staff, how is this something that you are ensuring over at Lazada?
So I'm very proud to say in Lazada, we were one of the first companies that actually, I mean, definitely health and safety and well-being of our staff is a top priority for us. On March 15, when the lockdown started, Lazada was one of the first companies that already initiated a month-long work from home. And the reality is we still continue to work from home. Obviously, this pertains to our office staff. Our logistics frontliners, our Lazada heroes, have been on the front lines since day one. What we're doing is we're ensuring that for our logistics side, we're ensuring strict health and safety guidelines. Example, regular disinfection of our warehouse and sort facilities, regular temperature checks, hygiene practices, mandatory mask wearing and disinfection. Upon delivery, we have physical distancing measures. In the warehouse, we also have social distancing in the sense that we extend hours to accommodate orders while operating a lower capacity per shift. And then as we change shifts, we ensure that the two shifts don't meet each other. So these are some of the practices we're doing to ensure the health and safety of our logistics frontliners as well as our customers.
All right, thank you for that. For those updates, you definitely have Lazada supporting growth for its sellers and customers at the same time for your staff. More growth projection, at least for Lazada, even post-COVID times. Thank you very much, Ray Alimurung, CEO of Lazada.
Thank you, Jes.
We're time to have a quick check of what's happening in the local bourse here. Things still not looking good here. We have somehow managed to pare back those losses earlier in the day, but still we are in the red, down 0.6% to 6,333 here. That, of course, after the country did report over 2,400 COVID-19 cases over the weekend here. If you try to take a look at some of our big guns here as well, things not looking good for most of our stocks here. Earlier in the day, it was DMCI that was leading the pack. However, it is now PLDT and Globe, surprisingly here, both telco players gaining big time. PLDT is inching higher, 0.2%. Globe, on the other hand, is up 1.9%. That's, of course, after Converge did announce on Friday that they are going to make a public offering come October. However, on the other end of the spectrum, we have FGen leading our losers here. They are down close to 0.6%. I want to zero in on one particular stock here. That is AC Energy. The company has confirmed reports that their power barge 102 in Iloilo City did discharge fuel at around 3 p.m. on July 3rd. The root cause, however, is still yet to be determined according to the company. However, initial findings saying that it's attributable to ignition of fuel oil in storage, which ruptured the barge's fuel tank. The company has immediately activated its containment protocols through containment booms, but due to strong ocean waves, some of the fuel oil escaped the confinement area. According to them, the leakage has been contained on the same day with help from 170 personnel from the Coast Guard. They also did tap Harbor Star to finish the cleanup of both the waters and the coastline. That is expected to be finished in 10 to 15 days. As you can see right here, Ace Energy joining the decline that we're seeing across the local bourse here. They are down 1.3%, priced at 2 pesos and 28 centavos apiece. And that's a first look into the business day this Monday, July 6, 2020. Catch us again tomorrow at 10:30 a.m. I'm Jes Delos Santos. We are One News.